topic of today. So now, for example, when and this is actually on continuation cases, we have 5 areas. Let's discuss the first one. We'll be discussing the first one on this specific class. So now, when you find maybe the market was up or was actually going down, created this maybe validation point, this invalidation point. Then after the market later on came and let me try to illustrate it clearly. This was my validation point. This was my validation point. So the market later on came again and created my, yes, something like this. So for example, this is your validation point, and this blue line here is your invalidation point. So now the main difference between this type 1 and other areas of liquidity is that you have to observe the candle that provided you the invalidation point. So in this case, we have this candle here that provided us this invalidation point, labeled number 2. After observing this now, you have to observe the left candle, the previous candle, and you have to make sure that the previous candle comes, this invalidation point candle comes and reacts above this previous candle, as you can see here based on this wick. And also, you have to observe that this candle that provided you with an invalidation point comes and closes above this previous candle like this. So downward here we have a candle closure, and upward here we have a reaction, a weak reaction, as you can see here. So if you see something like this now, this is what we call an area of liquidity type 1. Is illustrations in this candle. The market has to react above this area. The market has to close below this area based on the invalidation point, the candle that provides you this invalidation point. It has to perform these 2 tasks in order for it to be called a type 1. Even if the market provides you maybe a certain specific candle, for example, this is my invalidation point candle, the previous candle, even if this body is short like this, it doesn't matter. What matters is that the market has to come and react above to this area and comes to close below this area. This is what we call an area of liquidity type 1. This is our bullish case scenario. The market has to form something like this. I don't know if we are together.
Okay.
Yeah.
Okay.
Everything clear? Let us try to look at the
Yes,
examples. Yes. Actually, I've sent you a file. That file consists of more than 150 examples of this type 1. So on this session, we're not going to discuss them all because there are too many. There are a lot of them. We're going to discuss some certain special case scenarios that actually happen and how to deal with them. But those scenarios happen on all of these 150 examples. So I'm going to try to illustrate some specific terms here and criteria so that you can actually understand them clearly. So for example, we have this pair, we have all CHF. We have examples from A to U. Pairs, Australian dollar pairs, Canadian dollar pairs, CHF pairs, GBP pairs, NZD pairs, USD pairs, US30 pairs, Bitcoin, each and everything. So you'll extract that file I've sent you, then after you're going to look at some of the examples. So let us try to discuss. So we have this one. As you can see, the market was actually going down. Later on, it left you with this validation point and this invalidation point. So now, if I come to look my invalidation point, I see that this validation point, the previous candle, which was this one, the bullish candle here, that was the previous candle, comes and this invalidation point candle reacted above this area, as you can see. And also, the market comes and closes below by the body. This is what we call an area of liquidity type 1. As you can see here, market reacted above, closed below. So this is type 1. So if we come to, and here now on this validation and on this type 1, we are going to, on this area of liquidity, we are going to use validation to valuation analysis, VV analysis, but it's going to be followed by the indomitable. So they are working together on these specific terms. That's why first time I told you that don't do the assignments of validation and evaluation, because we're going to do a lot of examples on concerning this validation and evaluation on these types 1 areas of liquidity. So this is monthly time frame. If I come to refine this area to daily time frame, this was my liquidity engineering based on reactive liquidity engineering. And in terms of risk, I always use 15 pips because I know that if the market comes and stops me out by 15 pips, then I was completely wrong on this specific area. So I always use 15 pips as my risk. Even if the structure provides me with maybe 20 stop loss or 25, I actually use 15 pips after refining my entry clearly. But even if the structure provides me maybe 7 pips, I can use 7 pips also. But if the structure provides me 30 pips, 25 pips, or 20, I'm using 15 pips because I know if the market comes and stops me out, actually I'm completely wrong on that specific criteria. So here I have this as my liquidity engineering based on reactive liquidity engineering. Later on, the market came, tap into the entry point. As you can see, 14 pips, we are safe. The market went almost 3,380 pips. So this.
Did you took this trade?
Sorry?
Did you took this trade?
No, I didn't took this trade, but a lot of trades I took. I'll come to show you later on. I took a lot of trades, but sometimes also when you take trades like these ones, actually due to psychological intelligence, we can actually achieve maybe 900 pips, 1,000 pips, because it's very, very hard psychologically to hold a pair more than 1 year, more than 9 months. It's very, very hard. But when you actually try to, when you spot areas like this and you take your entries and manage to hold these trades, you're going to collect a lot of pips. Also, we have this Saudi CHF. We have this type 1 here. The market closed below this area, reacted above this area. This was weekly time frame as my constant time frame. So now I'm going to 4 hours time frame to refine this entry. And on 4 hours time frame, I have this also, reactive liquidity engineering. Later on, the market came, tap into the first entry. But as you can see, after market taps to the first entry, the valuation entry, the market provided us with another liquidity engineering based on Indomitable, which was also a reactive liquidity engineering. The market later on comes, taps into the entry point again, and provided another liquidity engineering, which is a normal liquidity engineering, and performed another entry again. So the market provided us these two Indomitable entries. Now the market continues to go down as usual. Each entry went almost 553 pips, almost 1:46. So you banked almost 1,500 pips on this specific entries. So that is how we deal with these type 1s. Also, we have this Saudi CHF. We have this type 1. This was not an area of liquidity, but it was as a zone. And that we actually use these zones because they actually work a lot of times. If you remember 2 months ago, actually gold rallied more than 3,200 pips. This was the result of type 1 from the 4 hours time frame. If you go and observe it clearly, that movement that the market can actually went almost 3,200 pips. It was a result of type 1. But also 2 weeks ago, when gold was actually going down, we used only type 1 to bank almost 1,300 pips. Only type 1. So now a lot of people in my country, actually, when they see my entries, they try maybe to go and look or try to guess the criteria that are actually used on that trades. But now if you go to my charts and as long as you know this type 1, you're going to see a lot of entries I'm taking based on this type 1 also. But also with some areas of liquidity, but type 1 also, a lot of entries that I took based on type 1. So you have this also as a daily, as a constant time frame. And when I come to another time frame, this was my liquidity engineering based on liquidity inducement, but also I'm having another type 1 here on this criteria, as you can see here. So this is very, very powerful conference. If you spot something like this, this means that your entry has highest probability of working. Later on, the market comes, taps into the entry point. As you can see, there is only 5 pips. Then the market went down almost 500 pips, almost 1:101. So that's how you are going to capitalize. Also, we have this Saudi JPY. On Saudi JPY, we have this type 1 on 4 hours time frame. This is just an intraday entry. And if I come 30 minutes time frame to do my refinements, this was my liquidity engineering and my risk was only 7 pips. So the market went almost 131 pips. So that's just an intraday entry. Also, we have this Saudi JPY. We have this type 1 on 4 hours time frame. The market closed above, reacted below, reacted above, closed below. We have validation point here as usual. We have this validation point also. So this is the clear type 1. And when I come to 30 minutes time frame for my refinements, here I'm having my liquidity flip. As I told you before, if you observe two areas, liquidity engineering and liquidity flip, it's better you mark first liquidity flip, because the best bullish setup are the failed bearish setup, and the best bearish setup are the failed bullish setups. But also some pairs like JPY's pairs and the CHF pairs, they have a tendency to come and collect the liquidity flip first. Later on, they come and collect the liquidity engineering. Then later on, they continue to move as usual. So this also happens. So on a case like this, you may actually, if you maybe are in some case of curiosity, you may actually mark these two entries also, this first one and the second one here. You just left opening orders, then after you wait for the market to do its thing. So here we have this liquidity flip. The market came, activated the entry. The risk was only 6.5 pips. Now the market continued to go down almost 383 pips. Also, we have this Saudi NZD. On this Saudi NZD, we have this one, type 1 as a zone on daily time frame. When I come to 1 hour time frame for refinement, I have this here, this liquidity engineering. But on this case now, actually I marked this clearly because there was two bodies on 15 minutes time frame and also on 1 hour time frame. That's why I didn't mark this down here. I marked this one. So later on, when the market comes and taps into the entry point, but even if you miss this trade, or even if you actually have maybe some curiosity on taking these trades also, you may take the second entry, which was from the indomitable. The market later on comes, taps into the liquidity engineering on this area right here. If you observe here, this doji right here, the market later on comes, taps into it. So the market continues to go up as usual, almost 128 pips intraday perspective. Also, we have Bitcoin, and on Bitcoin, actually, Bitcoin has one of the greatest tendency of turning those intraday trades into swing trades. So when dealing with Bitcoin, even if you enter maybe from 4 hours zone or daily zone, the market may offer some maybe 2,000 pips just by continuing to hold. Bitcoin actually has a tendency of turning intradays into swings. So if I come to the 4 hours time frame, this was my type 1. If you see clearly, the market reacted above, closed below. We had this validation point or this invalidation point clearly. So if I come to 30 minutes time frame for refinements, this was my liquidity engineering, but also I had another type 1 on this area, if you observe it clearly. So when you find trade like this, maybe on constant time frame you have type 1 and on situation time frame you have type 1, that is very highest probability trades that the market can offer. So later on, the market came, tap into the entry point, as you can see. Then the market continued to go down. It went down a lot of pips, almost 2,877 pips. And the risk was only 15 pips. Even if you put 10 pips here, you're actually safe because the market activated the entry with just a zero drawdown. Also, we have this Bitcoin. We had this one on 4 hours time frame. And here we have this type 1 on 4 hours time frames. Market actually reacted above here, closed below. So when you come to do some refinements, this was my liquidity engineering based on 5 minutes time frame. But also, even if you didn't refine this entry, you could have taken this entry here by risk of 15 pips. You were also safe. We actually tried to do this because we found out that there's a lot of maybe those screen snaps. So just do it to maybe save time. Also, the market came, tapped to the entry point. As you can see, the market continues to go. But also, after the market taps into this area, by indomitable analysis, we also took entry on this area right here. This is the entry that I took tactically. I took this entry, the first entry. Also, I took the second entry based on reactive liquidity engineering, but also it was also liquidity inducement engineering. Later on, the market came, tap into the entry point, and I hold this trade 1,000 pips, I remember, but it almost went to 1,200. Also, if you maybe you miss this first entry, also you miss the second entry, you actually take even the third entry on based on indomitable also of this reaction the market came and provided here. So the market went down like crazy, almost 1,300 pips. But I actually closed my orders when the market approached on this area right here. I didn't want more complications because I was tired of holding. So the market went almost that way. Also, the confirmation entry went almost 1,285 pips, also, as you can see. Also, we have this CAD CHF. On CAD CHF, we have this type 1 on monthly time frame, as you can see here. We have this validation point. Also, we have this invalidation point where we have this previous candle. The market came and reacted above it. Also, the market came and closed below it. So it is clearly that this is our type 1. And when I come to refine it on daily time frame, this was my liquidity engineering based on daily time frame. But also, if you observe this, this is not an entry. This is just a reaction. Sometimes the market has tended to provide some sort of reactions like these ones, because the market has not moved away from the area of liquidity. That's not the case. So we are going to wait for the entry at the exact point. Later on, the market comes, taps into the entry point, then the market continues to go down almost 3,265 pips. Also, we have this CAD-CHF. We have this type 1 on monthly time frame. As you can see, market closed below, reacted above. And on daily time frame for refinement, this engineering was taken upon refinement based on 1 hour time frame. But even if you mark this on this specific time frame without any refinement, you could also take the entry based on 15 pips stop loss. The market came, tap into the entry point. It was an entry with zero drawdown. The market continues to go down almost 1,258 pips. Also, we have this CAD-CHF. We have this one type 1 on daily time frame. If I come to refine it now, here was some specific candle on 15 minutes time frame. There was some bearish candle right here. So I drew it. Later on, I came to find out that on this candle, on this closure of this candle, there was also a rejection on this area right here. So I came to a conclusion that this is very powerful liquidity engineering, because we have a reactive liquidity engineering, but also we have the liquidity inducement engineering. So the market has high probability of coming to this area. Later on, the market came also, taps into the entry point, as you can see. But even if you were, maybe you had some curiosity on taking that trades, you could actually take the trade based on Indomitable also. This one was the entry, the second entry. But even if you missed the second entry also, you could take the third entry based on Indomitable also. This was the third entry. But even if you missed the third entry also, you could take the fourth entry based on Indomitable. So you could actually take your moves based on the criteria that the market is offering. So the market went up almost 638 pips. The risk was only 4 pips. Only 4 pips. So imagine what loss size could you have using on that specific area right there. It's massive actually. So let us we have this example here, CAD-CHF. We have this on daily time frame. When I come to 1 hour time frame for
That's huge. That's huge.
When I come to 1 hour time frame, this was my type 1 on daily time frame. When I come to 1 hour time frame for refinements, I'm having this as my reactive liquidity engineering. My reactive liquidity engineering was this one. Sorry?
Okay.
I can't hear you clearly.
Your voice is breaking. It's not proper, sir.
Hello? Is it network issue? Or...
Hello?
Yes, I can hear you clearly.
Hello?
Can you hear me?
No, your voice is breaking, sir. Your voice is breaking. Nothing. It's not clear, sir.
It's now clear. Oh, maybe there's
No, not now.
Now, can you hear me? Hello, brother.
Hello.
Can you hear me clearly now?
Yeah. Now it's clear, little bit clear.
Okay.
Yes, I can hear you.
Okay, so we are this type 1 on daily time frame. On 1 hour time frame, this was my liquidity engineering based on reactive liquidity engineering. Later on, the market came, tap into the entry point, then the market started to go up. But this entry from this type 1 here was a result of an entry from the type 1 from the selling scenario. And this type 1 was on this area right here. So that's why at my entries sometimes I write captions like as above, so below, as within, so without, because you're actually taking a sell entry at the same time you're taking the buy entry on that specific pair. So this area now, when I come to the next chapter, which is this one, this now was my type 1 that took my price downward before it started to go up. And when I come to refine this area, on a time frame, this was my liquidity.
Your screen is stuck. Your screen is stuck. Your screen is stuck.
My screen is stuck. Let me share it. Let me share it again. Let me stop share first. Then after let me share it again now. Let me share it. Is now clearly
Yeah,
seen?
yeah.
Okay, let me
It's not
start. Let me
clear.
start again. I said we had this type one. This type one here was a result of selling entry before we start to buy also from the previous type one. So on our time frame, this was my liquidity engineering. It was also based on liquidity inducement, which is very, very powerful. The market
Yes.
came. So this was also from the case of refinement, this was just a 5 minute entry. But even if you took this entry without the refinement, also you actually saved by 15 pips. Later on, the market came, tap into the entry point, as you can see. But even if you miss this move, don't panic, just look around. The market later on comes and gives you this indomitable entry. But also, even if you miss the second entry also, you actually come and take the third entry based on indomitable again. The market taps into the entry point, so the market continues to go down like that. So the market went on, the risk was almost 7 pips, the market went down almost, yeah. Also, we have this card chef. On this card chef, we have this type 1 here on 4 hours time frame. So when you come to refine this area on 30 minutes time frame, here, this was my liquidity engineering from the 5 minutes time frame, but there's something that I have to address here. As you can see on 30 minutes time frame, the market left us with this type 1 here also. And this type 1
Yes.
is at the areas where we have the 5 minutes area of liquidity. When you come to 5 minutes time frame, this was just a body also. It was the body here. But if you come to 30 minutes time frame, you can just see the market is at the wicks. So it's actually clear. So now, if you observe situation like this, the market here actually varies based on criteria. You could actually mark, or you could actually refine these liquidity pools on this type 1 from 30 minutes time frame. But sometimes also the market may come and provide this case also downward, maybe on somewhere like this. So it's better to sometimes to mark by the zone. So to avoid concussion or to avoid missing of entries, sometimes I actually mark these areas on the zones like this. Then after I'm waiting, because sometimes the market may come, may not reach. Sometimes the market may actually come through this area and tap, and then the market doesn't come to a liquidity generation also. So there are a lot of misconceptions. We miss a lot of entries, but it's better to mark that way. But on this example, the market came, tap into the entry point. But also, if you observe clearly, I don't know if you are familiar with something that is called the banker block. I don't know if you know it.
No.
This banker block is just a candle where if it's available, if you try to expand your trading view, you may not know that this candle is the bearish or the bullish. That's what we call the bearish, the breaker block. And when you spot this candle on areas of interest, or maybe on the confirmation entries, or on the maybe the liquidity engineering, or maybe the indomitable, you can actually mark these entries. So if you look clearly here, we are this now. This was our banker block. And the market, how to trade this here is that you just have to go and mark on the body of that candle. Later on, the market comes, taps into the entry point, as you can see. Then the market continues to go down. So it has to happen on areas of interest, maybe near the liquidity engineering or near the liquidity flips. You're actually taking the entries based on that criteria. So the market went down almost 190 pips by the risk of only 6 pips. Also, we have 4 pips as a risk. The market went to 183 pips also, 145, which is actually good. Also, we have this card CHF. We have this the 7th example. As you can see how card CHF obeys these type 1s. We have the 7th example. Also, this was type 1 based on 4 hours time frame. And if I come to refine it, I had the liquidity flip, which was a special case flip. So after observing this now, the market later on comes, taps into the entry point, then the market continues to go down 268 pips. The risk was only 1.6 pip. So, but the broker won't allow you to put this risk. You have to extend it maybe to 2 pips or 3 pips somehow, because there are some cases like slippage, cases like spread. So it's safe for you to put maybe 2 to 3 pips. Also, we have this card JPY. We have this type on daily time frame. And when I come to define it on 1 hour time frame, this was my liquidity engineering, reactive liquidity engineering. Later on, the market comes, taps into the entry point. As you can see, then the market starts to go down. 290 pips was the result of this trade. Also, we have this card JPY, the second example. We had this one on 4 hours time frame. The market reacted above, closed below. And on 30 minutes time frame, this was my liquidity engineering based on reactive liquidity engineering, but also it was also the liquidity inducement. So it's very powerful. Later on, the market comes, taps into my entry point, then the market continues to go down also, 297 pips. Another example, we have this HFJPY. On HFJPY, we have this one, type 1 on monthly time frame. And when I come to define it on maybe daily time frame, we have this liquidity engineering right here. Later on, the market comes, taps into the entry point. It was an entry with 0 drawdown. Then the market goes down 565 pips. Also, we have this example, HFJPY number 2. We have this type 1 here on the daily time frame. So if you observe clearly, when you come to refinements on 1 hour time frame, this was my liquidity engineering based on both liquidity inducement, but also the reactive liquidity engineering. Later on, the market comes, taps into the entry point, as you can see. But even if you missed this first trade here, you could actually take the second trade based on this type 1 from the 1 hour time frame the market actually offered here. So you could have take the trade based on this criteria right here. Then the market continues to go down as usual. And the market went almost 262 pips. Also, when this market was actually coming down right here, based on this type 1, also we had the type 1 from this side here, from the daily time frame, that result from this movement to start going up. So when you are actually took your sales here, you're going to go out of the sales and you're going to take a buy again based on type 1 that's located on this slide here, which is this one. This was the type 1 from 4 hours time from that stopped us out, that hit our TP on the selling entry. Then after we're going to take the buy entry again in a 30 minutes time frame. This was my liquidity engineering. Later on, the market came, tap into the entry point, as you can see. So that previous type 1 was located on this area, took the sell. We're going to take the profit and then we're going to buy again. So as above, so below. So the market started to go up, went up almost 1,900 pips, as you can see. Also, we have this euro out. On euro out, we had this type 1 on weekly time frame. And when I come to do some refinements on 4 hours time frame, this was my liquidity engineering, clean liquidity engineering. Later on, the market comes, taps into the entry point. Then the market continues to go up almost a lot of pips, almost 3,885 pips. The risk was only 12 pips. Also, we have this euro out. We have this type 1 on daily time frame, if you observe it clearly. And on 1 hour time frame for refinements, we had this liquidity flip. But the market didn't trigger the liquidity flip. But on another servers like FXCM, servers like FOREX.com, this entry was triggered. The market came and triggered the entry with 0 drawdown. But that's not the case. That's not the case. We actually don't hit any excuses. The market later on performed another type 1 on that specific area. As you can see, I actually drew it here on this specific oval. Then the market left us with this liquidity engineering, and we marked this. We didn't refine this more because the risk was very, very low. But even if you went to this liquidity pools here and try to refine this entry, we could also have taken the best entry ever. So later on, the market came, tapped to the entry point. So as you can see, when somebody maybe tried to refine this entry here, he could have taken the best entry also. Then the market started to go down almost 1,885 pips. This trade, I also took this trade, I remember. Also, we have this euro card. The euro card, we have this one on 4 hours time frame. So now on this euro card, if you observe clear, this was an incomplete type 1, but we took it because on another servers like FXCM, it was a complete type 1. So we actually try to take it and see how the results may go. And on 30 minutes time frame, we had this liquidity engineering right here from 30 minutes time frame. But if I go deeper on the maybe for the refinements, this was my liquidity engineering on 5 minutes time frame, but it was also a liquidity inducement, or it was also a normal liquidity engineering. Also, it was also a a lot of confidence that we are used to take this entry. The market later on comes, taps it to the entry point, as you can see. Then the market continues to go down almost 220.
Go back. Please go back from the in this example. Come with the start, please.
Yes, from this start, as you can see here, this
Yeah,
on this
both
it is
wicks
not a
are same.
visible. This is not a visible type 1, as I've said, but
Yeah.
we took it because from another savers, this was Oanda saver. If you observe clearly here, this is Oanda. But on servers like FXCM,
Yeah, Onanda.
like
Onanda.
forex.com, yes, servers like forex.com,
Okay.
it was a clear type 1. The
Yeah.
market was actually above this area right here. The market reacted above on this server.
Okay.
So we took it because actually these are the same pairs on that specific servers. So we tried to take it and see how the results may go.
Yeah. Yeah. Got it. Got it there.
Yeah.
Okay.
Okay, so the market went almost 1,000 pips. Also, we had this Euro CHF. This was a clear type 1. If you observe clearly, the market reacted above here, closed below this area right here. And when you can't refine it on 4 hours time frame, this was my liquidity engineering based on liquidity inducement also. But also, I had another type 1 on situation time frame, which is this one. So if you observe a situation like this, just know that this trade is as high probability of working. Later on, the market comes, taps into the entry point. But now let me try to explain to you on the issue of managing these trades. For example, your entry is triggered, as you can see here. You don't have to put your stop loss into break even until the market has to maybe go low, then creates new structure like this. So now here, you're going to take your stop loss here, you're going to put it to the break even. If you observe clearly on this example, maybe this was the entry taken, the market didn't come and close below here, later on comes and taps to your entry again. So for the maybe someone maybe tried to take this break even this area right here, he will have stopped out. Then the market continues to go in your direction, something which is very, very painful. No one wants that to happen. So that's how you manage these trades. When you take your entry, wait for the market to create a new low first. Then after you're going now to take your entries from stop loss here, you're going to put it to break even in order for you to protect your capital. So later on, the market went down almost 550 pips. Also, we have this example, Euro CHF. We have this type 1 here on daily time frame. And when you come to define it on 1 hour time frame, this was my liquidity flip. But remember now the concept I told you, when maybe we have the liquidity engineering or the liquidity flip that coincides with this type 1 on this situational time frame, as you can see here, sometimes it's better for you to mark as a zone, because sometimes the market may not come to this flip. It may come somewhere here, then the market continue to go down. This case actually happens a lot. So that's why you actually use this criteria to take these entries. So later on, the market comes, as you see, taps into the entry point, then the market continues to go down. So there are a lot of examples. If I try to explain all of them 150 examples, we may use even 3 hours to 4 hours. So I've sent you the files. You can actually extract them to your computer and review all of those 150 examples also. And if there's any questions so far, you may ask.
Not related to this. I have already understood the topic, so I'm okay with it.
Yes.
Yeah.
So
the topic is over.
You'll provide me 15 examples of these type 1s. So the funny thing, when I tell a student to go and find me 15 examples of type 1, they actually go to my Instagram, they take my entries, and
No. I don't do all this stuff.
Of course,
you have seen you must have seen all my assignments. Everything is new, not related to you.
Actually, I'm talking about these Tanzanian people. Actually, these my students actually.
Okay.
They try to do something like so. So that's how type 1 works. And this is the last session on our phase 1. So after these assignments, we're going to start to this, because if you observe clearly on this phase 1, we are actually talking about the continuations only. We're talking about the continuations only. So on phase 2, we are going to talk about the reversals now. What do we do if the market comes and tries to change or tries to do some transitions? What we're going to do, we're going to discuss it on phase 2 after maybe the assignment is clear and everything is good.
Do you use, are you funded?
Of course, I am funded.
Okay, and this all these concepts are discovered by you, or you have been learned from someone else?
Actually, this concept, after learning from my mentor, I actually took time. It was 4 months, because when no one taught me this liquidity, these areas of liquidity. No one taught me. I was just taught that to use each or any of this area of liquidity. So for my experience, I found out that I'm getting a lot of losses based on these areas of liquidity. I'm failing to choose specific areas. Some of them work, some of them don't. So I try to sit on the charts almost 4 months, 19 hours every day, try to look candle to candle to see what type or what areas of liquidity that have highest probabilities. So after 4 months, I came up with these 5 areas of liquidity that have highest probability of working, and I am using them only. I don't use any areas of security from these 5 that actually backtested them a lot. So these actually
Wow,
I try to do this in that ways.
that's commendable, dear. You have worked so hard and you are teaching us. It's
Well,
very nice.
yes. Thanks
Thank
a
you,
lot.
sir.
Okay. I'm sending
Thank
you
you.
this video. I'm uploading it, then after I'm going to give you access so that you can repeat it. So
Yeah,
after the assignments complete, we're going to continue to phase 2.
yeah. One more thing, and
Yes.
when I will be like ready to trade, like when should I try on markets
Uh,
as for you?
you mean the days that you are going to start trading?
No, no, no. When should I start? Like when should I go for the market?
It's better
If
for you to
I'm
go to
what
the
I'm
markets after we study those 3 agglomerations that we're going to study them on phase 2, because these
okay.
now are the ways that when you understand clearly these agglomerations, you are going to trade on each market conditions. 1 minute time frame, you're going to trade. You're going to trade on 5 minutes time frame, 15 minutes time frame. You're going to trade. You're going to trade on 1 hour time frame. Each conditions are going to trade when you understand these 3 agglomerations, and they are very, very powerful actually. So you're going to start trading on phase 2 after studying these 3 agglomerations.
Okay, okay, okay. Do you do day trading, scalping?
I trade each and every aspect. I can hold pair 6 months. I can enter scalping. I can take 40 pips, for example. I can take intraday trades. I can do anything. I will show you clearly,
Okay,
because taking or maybe try to scalp, maybe try to intraday, try to swing. It's just a matter of time frames. What time frames are you using? If you want to swing, you can actually take areas of liquidity based on the monthly time frame. When you take areas of liquidity based on monthly time frame, you can and the entry maybe comes to and your entry is triggered. You can actually hold the pair even 7 months, because the market has to create a new low. And for the market to create a new low on this monthly time frame, it takes a lot of months. But even if maybe
yes.
you want to take intraday trades, you can actually go for areas that are actually maybe located on the 4 hours time frame or the daily time frame. You are taking your trades based maybe on lower risk, then you're going to take maybe 80 pips or 90 pips on that specific day. But even if you want to scalp, you can actually take trades or the areas of liquidity from the 1 hour time frame or the 30 minutes time frame, which we are going to discuss it
Okay.
clearly on these agglomerations. Yeah.
Yeah, you will teach me the target area also till where I should hold a trade.
Of course, let me try to explain to you the target area on a basic level. For example, you have this area of liquidity and you
Yeah.
marked it, and maybe your entry was triggered. For example, this was your
Yes.
entry. After the entry is triggered, the market start to go down. Your first target is going to be this area right here, because
Okay.
the purpose of the market to come and clear liquidity is that it has to consume liquidity so that it can continue to go down, it can continue to move, and the market must come to create a new low. So this is not your final
Yes.
target, it is your first target. After the market comes in this area and close below this area, you are going now to observe the shift. So the shift, I'm going to talk about it on the next agglomerations. So we're going to talk about this clearly. Actually, the shift. We have to observe this kind of criteria down these areas so that we can know that we are no longer holding this trade on selling. We're going now to find opportunities on bulling.
Okay. Okay.
Yes.
No
So
issues.
I'm uploading this, then after I'm going to give you access right now.
Yeah. Okay. Thank you.
Okay, thank you
I'll
too.
send my assignment maybe tomorrow, and then we can meet again soon.
Okay, no problem, brother.
Okay. Thank you.
Okay, thank you too.